Another day, another topic, another discussion for you. And I'm so happy to be here. Thank you for joining me. If you're watching me live, if you're watching this later, I appreciate it as well. So today we're going to talk about a number one question that I get so often with many of my clients, but not just my clients, but actually potential clients. People that are just either texting me, messaging me, or looking me up on my website, on my YouTube channel. And there's a number one question that I get quite often, and that question is, how can I improve my credit score? And that's usually the number one question that I get when I'm working with a client or I'm working with a potential client. It's really, I talk to a lot of people that are just struggling with their credit. They're struggling with how to improve their credit. They're not really sure how to go these days about improving their credit profile, their credit score. So like I said, the number one question that I get seems to be lately is, how can I improve my credit score? And so with that said, I want to go over that today and just talk to you about how you can improve your credit scores. There's actually some basic some basic topics, some basic understanding that if you have these basics understanding understood on your knowledge of finances, it'll help you improve your credit score. And with these basic instructions, you will be able to boost your credit in a matter of time. I mean, it's not going to be instant, but in a matter of time, if you carry these habits with you, you're going to be able to work on your credit profile so that you can have that buying power that you need in time. And so one of the things that you can do right now to help improve your credit is to pay your bills on time. I know that might sound elementary, but it is so true, because paying your bills on time is actually the number one issue that is either bringing someone's credit up or bringing someone's credit down. And it's really your payment history. So if you can keep paying your bills on time, that's going to show your creditor and future creditors so much that you have so much potential, because you're reliable on the money that you've borrowed. Does that make sense? So if you borrow money from a creditor or a mortgage company or a loan agency, and you can show that you're paying back your part of the deal, then over time it's going to improve your credit. And not only that, here's a great thing: you've developed a great relationship with that creditor or that credit card company or this mortgage company. So if you can develop a good relationship, then the possibility that they would want to lend money to you again is very promising. And that's the whole idea. It's if you can think about, you're developing a relationship with, let's just say, a credit card, for example. You get this credit card and it's got a $2,000 balance on it. And if you can show that credit card company that you use it responsibly and then you pay regularly, you're not late, then you're proving who you are to them, and you're developing this relationship with that credit card that in time they may actually give you a bonus and increase your limit. And if you can get your limit increased, that's a great thing. And then not only that, a lot of credit card companies have other credit cards. They have Sky Mile credit cards, they have bonus cashback credit cards, they have credit cards for traveling, for hotel. And if you can qualify for some of those credit cards, then you are even going to benefit from the products that they have even more, because you've developed a good relationship with them. Think about it this way. Let's say you had some money and some stranger came up to you and wanted to borrow money from you. And you're kind of skeptical, you don't know who these people are, but you're going to take a chance on them, and you give them $100 because they're asking you if you can borrow $100. And you can see how there's a little bit of skepticism in here, because you don't really know these people, but you lend them $100, whether it's a friend or someone you barely know. Okay, so you lend them $100 and they promise to pay you back $100 in a month. And let's say they do. They pay you back 100, but not only that, they pay you back 10%. So they not only paid you back the 100, but they paid you back $10 on top of it. So they gave you $110 off your 100. Now you just made some money. So now you can see how this person that borrowed the money from you is a little bit more trustworthy, right? Because they came through with the agreement that you had. So let's say a month goes down the road, and then so they came back and now they want to borrow $200 from you. So you are not as skeptical, because when you lent them $100, they paid it back and then some, with some interest. Okay, so now you lent them $200, and a month goes by, they pay you back, and they gave you $20 on top of that. So not only did they pay you back the $200, but they gave you $20 additional dollars, so you made a little bit more money. So the month number 3, they came back and now they want to borrow $500. But you're not as skeptical, because when you gave them $100, they paid you back. When you gave them $200, they paid you back with interest, and now they are asking you for $500. You can see how now that you've developed this relationship where it's not as scary to lend this individual $500, because they were worthy to pay you back the $200 and the $100, and now they're asking for $500. You're not as worried about that because they have developed a good history with you. Does that make sense? So that's kind of how these lenders and creditors are looking at you. If you can develop and establish a good payment history, then you are creating a relationship with them, so that in time, maybe a half a year, 8 months, 10 months, a year from now, if you can establish this good payment history, they're going to be more willing to lend you more money, because you are trustworthy on paying back what you have borrowed. So I hope that makes sense. That's the key number one. If you can just make your bills on time, you don't want to go late, because as soon as you go 30 days late, it's a red flag. If you go 60 days late, it's a bigger red flag. And if you go 90 days late, yeah, that's really, you're putting yourself in some deep water, and you almost could have damaged a relationship with these creditors. So you don't want to do that. So paying your bills on time, even if it's minimum, is key. So keep that in mind. And the number 2 is you want to also keep credit card balances below 30% of the limit when it's time to pay your bill. So what does that mean? So let's say you do have like a $10,000 credit card. Okay, now they gave you, or they're allowing you to spend $10,000. That's not the problem. So you can spend as much as you need to that month. But at the end of the month, when it's time to report what your balance is, because your balance gets reported once a month to the creditor, and not only that, to the credit bureau, if you can bring that balance down below 30%, that's ideal. So 30% of $10,000 would be like $3,000. So let's say you use your credit card and you spent $5,000 on it for the month. Okay, not a problem. But at the end of the month, you don't want $5,000 to be reported. You want a minimum of 30%. So you want to bring that back down to under 30%, which would be $3,000 or better. So if you can bring it even back down even lower, 20%, 10%, that's even better, because that's going to keep your credit. That's going to boost your credit score, knowing that your credit limit is below 30% of the limit. Your credit card balance is below 30% of the limit. So if you can keep those 2 things in mind, paying your bills on time and keeping your credit card balance under 30% of the limit, that's another key factor that's going to help boost your credit. And another thing is avoiding opening too many credit cards at one time. Now, there's a lot of people that have multiple credit cards, and that's not actually a problem if you can manage that. But at the same time, though, you don't want to go like, for example, today or tomorrow and start just applying for all these credit cards, because if you do it in an irresponsible manner, then every time you apply for a credit card, it's going to trigger a hit on your credit report. And if you get denied and you get denied and you get denied, all in a lump sum in a short span of time, then the next time you go to try and get a loan, it's going to appear on your credit card, your credit profile, your credit report, and it's going to show that you had all these hits in a short amount of time, and it's not going to look good for you. And at the same time, it will bring down your credit score. So you don't want to apply for too many items in a short amount of time. You want to spread it out. If you need a credit card this summer, okay, great. But then you don't want to apply for another one for a long period of time, because you don't want to apply too many times for many different credit cards at the same time. Because if you start getting denied, it's going to look bad, and it's actually going to make you look that you're desperate. And you don't want to look desperate. You just want to look like you're here to help, to establish a good relationship like we're talking about. If you think about that as a relationship, it's going to help you in the long run. Try not to think of them as a business. Think about it as a relationship. And when you have a good relationship with these credit card companies, they really can help you out if you need to in the future. Now, another method or item that you want to keep in mind to help boost your credit, improve your credit score, is to actually check your credit report regularly and check and see if there's any errors on your credit report. Now, this is one of the things that most people do not do. They don't check their credit report to see if there's any errors, because credit reports are not 100% trustworthy. There are a lot of errors on a lot of people's credit reports, and I deal with people with their credit report, and I look at credit reports on a daily basis, and I can assure you that most people have errors on their credit report. Just as a matter of fact, this past several days, I'm dealing with several different of my clients. We pulled up their credit report, and every one of them had some type of sticker shock, so to speak, because there's items on their credit report that they had no idea was even on their credit report. And thankfully, we took some time to go through their reports, and we're going to clean it up for them. We're going to work on that. That's what we do. But I want you to know that you need to take a look at your credit report, because there's a lot of items on there that could be untrue. They could be wrong. It could be anywhere from the misspelling of your name all the way to addresses that you may or may not have ever lived before, or credit student loans that didn't never apply to you. So those are the things. It's just a a few things that you need to take a look at on your credit report. And if there's inaccuracies, then we need to address them, and we need to clear them up, because that's going to affect your credit score for the good or for the bad. And if you have errors on your credit report, it's going to be a negative on your negative input on your credit. So you need to get rid of those negativities so that only positives show up on your credit report. So I hope that makes sense. One of the last things I'm going to talk about today is the number 5th item is to maintain a healthy mixture of credit. So I hope that makes sense. So what does that mean? So if you have a credit card, that's one type of credit. A credit card is one type of credit. If you have a car loan, that's a different type of credit, because a credit card varies monthly in your payment, right? It varies on how often you use it. Your balance fluctuates, therefore your interest may fluctuate, and not only that, your payment may fluctuate. So that's one type of credit. A credit card fluctuates, but that's one type of credit. A second type of credit would be something like a loan, and I'm just going to go and make it simple, like an auto loan. Let's say you had a car note that you are currently paying, and it's already been established on the interest that you're going to pay. And I'm just going to make it up. Let's just say you have an auto loan at 6% interest, and for the duration of that loan, and let's just say it's a 5-year loan. Okay, so that's a credit, but it's a different kind of credit, because that credit doesn't fluctuate. It's like a hard payment every month. Every month it's going to be 5%, and every month it's going to be whatever your payment is. Let's just say $450 a month. So you know that every month you're going to have $450 car note every month, and that's also a credit. It's not a revolving credit or a cycle of credit like a credit card where it will fluctuate, but it is a credit nonetheless. And if you can show proof to that lender that you are making these credit these auto loan payments on a regular basis, that's going to be key, because you have to remember, some of these auto loans are a part of a bigger company that you could have a good relationship. For example, like a credit union. A credit union is a great place to get an auto loan, because usually they offer lower interest to people that have good credit. But not only that, people that have good credit, but are members of their credit union. So if you can just establish a good relationship with their credit union, you know, they'll look back in time and say, well, that you did really well with this loan that we gave you for the auto loan. So now you need a home loan or home equity line of credit or some other type of product that they have. They are more than likely going to give you another loan because you proved to them that you can handle the smaller things like an auto loan. Then they will give you open doors for you, so to speak, so that you can have other loans that are going to be benefit for you and for your family. So I hope those are helping you understand a little bit on how to boost your credit. So I'm going to repeat those real quick. Pay your bills on time is key factor. If you can pay your bills on time, then that's going to go miles for you. Paying your bills on time, keeping your credit card balance at the end of the month below 30% of what the limit is. So you're going to have to figure that out on your own. Whatever your credit limit is, keep that under 30%. And then the number 3 item is going to be avoid opening too many credit cards at the same time. You don't want to do that. Like I said, it's not bad to have many credit cards, but don't open them all at the same time. You want to slowly establish relationships with these companies. And number 4 is to check for errors on your credit report. And if there are errors, you want to address them as soon as you can, because if you don't address them, nobody's going to get it for you to be taking the initiative so that you can take a look at your report and get any negative items off your report, because it's going to hinder your report. And then the 5th one is to have a healthy mixture of different types of credit, like we talked about before: credit card, loan, maybe you get a mortgage, some type of home equity line of credit, whatever. All these different types of products are available to someone who has good credit. And if you have a mixture, then that's good, and it's good for you. It'll help you on your credit score, your credit report. So hopefully these little tips and tricks are going to benefit you and your your financial goals. I think we all have financial goals. A lot of people that I talk to want to start small businesses, or they just want to get a house, and they're trying to get a house for their family, but they're kind of in this rut because they need some work on their credit. So we go over that with them, and we go over the do's and the don'ts of the credit. And there's a lot of benefit for having good credit, but at the same time, there's a lot of it could bring you heartache and headaches if you have bad credit. So I hope this helps for you. And if you like more of this type of contact, I would ask that you would just like and subscribe to my channel. I just 100 videos on my channel, and I am just beginning. So there's a lot of topics I want to cover. There's a lot of things I want to go over for you and my clients. And if you like this type of content, like and subscribe. If you need a free ebook, I have you can go down to my channel, find my link to get a free ebook, and you can sign up for my email list. But I thank you so much for listening. I appreciate your time if you're watching this far, and I hope that this helps, and I hope that you will have a great day and a blessed day, and that we'll see you soon. So thank you for your time.